Hey guys, welcome back to another Money Tip Monday. My name is Lizy Hofer. I'm a loan officer here in Phoenix. And if you've watched this channel, you know that this is a practical money tip channel, primarily because I believe in the importance of strong financial principles, especially if you're going to make a home purchase. This week's money tip is going to be very different than the ones I've recorded before, primarily because this week in the market was probably the most volatile I've ever seen. I've worked in mortgages since I was 19 years old. I have worked in it when we saw the original recession, and I've worked in it way afterwards. And this week by far was like so many unknowns, right? We saw a crash in the bond market, in the stock market. We saw mortgage-backed securities not get purchased by anyone. And because of that, we now have a banking crisis. We have a potential unknown fear of a virus we've never seen before. It is unprecedented times. And so I wanted to record today's money tip, one, just to explain what I believe is going to happen for housing, what I see happening in the next 6 months as far as, recession. I do want to reiterate the smart steps. And then I would just, I just want to give some confidence also on what you can do if you find yourself in hard times. I am going to ask you to comment and subscribe to the channel. One, because I really feel that this dialogue is super, super important. And also because I'm going to be giving lots of updates from here on out. So where to begin? Well, last week, you might have heard from your loan officer that they couldn't lock in your home loan, that the market was just too unstable for mortgage companies to hedge pricing. What that means is that on every given day, mortgage banks release pricing based on what they believe that they can package and sell. Because no one was buying mortgage-backed securities except for the government, we'd see that the mortgage bonds would open great, and then after the U.S. government purchases, the market would crash. There was no way to stabilize prices, no way to securitize the mortgage-backed securities. And because of this, it was a crazy time. Many banks didn't issue rate sheets. Many banks, limited the number of refinance applications. It's across the board. Bankers were quoting 3%, 5%, no percents. It was just so bananas. So if you locked in a rate this week, I hope it was a good one. Chances are you might have also been given direction to float. I know I talked to many of my clients about that. I do believe the market will stabilize. But I just want to let you know that happened across the board for mortgage companies. When we talk about liquidity, what we're talking about is the banking system is kind of like every bank is kind of has a large credit card. Might be a really crappy analogy, but I'm trying to explain this in a way that you guys will understand. But essentially, they have a limit on the amount of loans that they can fund. And the way that they replenish their line is through the sale of mortgage-backed securities and the sale of loans. Now, when the mortgage rates declined at such a rapid pace, there was this enormous amount of people interested in refinancing that actually maxed out people's capacity to fulfill their lending. Without mortgage-backed securities being purchased, right, many of these banks had a liquidity issue, meaning that they couldn't continue to loan out or that they weren't going to have the liquid funds available to service these loans. Now, what happens in a time like today, right, where we have the government agreeing to buy mortgage-backed securities. Investors don't want to buy them right now because, one, there's going to be job losses. There's declines in income. People are going on furlough. It's just a really unknown time with how long people are going to be out of work. And so the likelihood of people defaulting on mortgages seems a lot higher than in previous years. It's a very strange time in mortgages. My personal thought is that the government will end up having to buy all of the mortgage-backed securities, just like they did during, the last financial crisis. Nobody wanted to touch a mortgage-backed security with a 100-foot pole. So I think that's what's going to happen for the short term now until the economy gets back on its feet. Okay, I think when that happens, I think the market will stabilize. I think they're going to be purchasing bonds. There's talks of them giving $1,000 to every U.S. citizen. Believe it or not, I actually do have a lot of confidence that the government will figure out a stimulus plan that will stabilize the markets. Okay. Now, having explained all of that, right? If you are somebody that's interested in refinancing, I think you need to set up your mortgages right now and then just constantly be in communication with your real estate agent, or excuse me, with your loan officer. If you're somebody in the market to purchase, you need to be communicating with your real estate agent and your loan officer. Now, let's go on to what I think will happen with the economy just in general. Okay. So from everything I've read, it sounds like the peak of the virus is going to hit somewhere around summertime, right? Which means that there might be like several weeks where we're quarantined, several weeks of working from home. If you're in a service-based industry, your income is most definitely going to be impacted. If you're a small business owner, your income is definitely going to be impacted. I don't know how that relates to mortgage guidelines yet, but I can, just from the past, I think there's going to be additional verifications of employment. I think there'll be additional verifications on assets, okay? Just to be truthful and candid. I also think that if you were depending on down payment assistance, that might not be available for you. In cases where people are going to be furloughed or they're going to be laid off or they're going to have a decline in income, this is where I believe the government is going to come forth and say that they're giving money to all of Americans. The other thing is many banks are currently offering like payment forgiveness. People, many states have said that they're not going to, report foreclosures. There's many states calling on the credit bureaus not to report late payments. So, I do think that there'll be a lot of assistance and relief, and I'm definitely going to be putting out more information on what that looks like in the weeks to come. Now, if you are somebody that falls into that category, right, I think that it's prudent to look into selling your property. Okay. Now, I always tell people not to sell in a panic, but not having a job, not knowing when your next paycheck is going to be, is a reason to sell your house. I don't think you would be panicking, okay? Especially if you do not have reserves, okay? If you have plenty of reserves, wait it out, okay? If you don't, this is why you own property, right? Because you have reserves in property. I literally just talked to a client who owns a salon. She has more than $100,000 in equity in her property. Her business will more than likely close due to this. I said sell, right? You have $100,000 and this is why you purchase real estate. Sometimes you have to sell your investments to make it. So if you're in a position like that, definitely do it. A lot of people are concerned with house values right now. And here's one thing I do want to point out. In the last 5 recessions that this country has had, and let me tell you, there have been more than 2. There's been actually I think this is the 58th since our country's inception, right? 2 of them have had a pretty significant impact on housing. One was literally less than 1% in the 1990s. And the catastrophe that we now call the Great Recession, okay? A recession does not mean that your house is worth nothing, okay? In fact, one of the benefits of owning a property is that it does not fluctuate like a bond or a mortgage-backed security or your stocks. Quite frankly, it is way more stable of an investment in those terms. Now, in many recessions, housing values actually go up, as do rents, okay? And because rents go up, people then turn to buying, okay? So I just want you to know this does not mean that your house is now gonna plummet, okay? It is still a fantastic asset, and specifically for the Arizona, right? Specifically for the Phoenix areas, right? Here's what I will tell you. We are in such demand, right, for housing. There are more people moving to this state every single day. There are not enough homes on the market. In fact, a couple weeks ago, we literally had less than a month's supply, right, of inventory. So that meant that not enough people were, turning over their properties. So what will happen is, there'll be some extra inventory, right? So if you need to sell your home, sell your home. This is probably a good time to get top dollar. Now, if you own an Airbnb right now and you weren't prepared to make multiple mortgages, also maybe in time to consider selling. I imagine that people will be selling their second homes as well. People tend to want to sell assets, and minimize expenses in recessions. I think it makes perfect sense. Now, if you are a primary resident, primary occupant in your home, and your intention was to live there for 10 years, do not fire sell your home because you are panicked. One, you have to live somewhere, and two, you're only going to lose a bunch of money. Okay, real estate is intended to be a 15 to 30-year investment. Okay, that's what it is. Okay, don't panic because everyone's panicking, right? This is how people lose thousands of dollars in their retirement funds, right? It's why people just end up making dumb financial decisions because their next door neighbor is doing it. You just have to practice sound financial strategies. Here's what I will say about sound financial strategies. It's like an oak tree in a hurricane, okay? You may lose some leaves, you may lose a couple branches, right? But if your roots are firmly grounded into the earth, you will be okay. So what do sound financial strategies look like? Well, I've been preaching, learn to live off of 70% of your net take-home income. Of that net take-home income, your housing should make up 30 to 50% of that, depending on how much you're spending. Then apply 20% to reducing your principal debt, right? Once you don't have debt, then look into returns, right? On cash flowing investments like dividend paying stocks, real estate, right? Royalty trusts. And then 10% of your income should go into a rainy day fund, like crises like today. I've been preaching these principles for a very long time, and they seem to only make sense, right, when people are reminded that shit happens. And so I will tell you today, I'm going to be pushing out a whole lot more content this way. My husband and I started a private Facebook group for the Smart Steps, right? So we can answer questions on practical finance. I really believe that this is what we need to be doing nowadays. And if there are any questions that you guys have, I want you to let me know. I am also going to be putting out information on where to go if you are in a hardship, right? A couple things I will say. You don't necessarily have to sell, right? If you don't want to, you can look into a forbearance. You can look into what's called a loan modification, right? But again, those things are modified payments based on you still having employment and income coming through. Okay, so if your employment's been decreased, definitely something maybe to look into. All right, guys, this was a lot of information today. I am going to be putting out so much more content. And if you have any questions or need anything, right, please don't hesitate to comment below. I really want to be a voice of reason in all of this chaos. And, my prayers go out to all of you. Please stay safe and healthy, and don't forget to social distance.